sources from Russia and China explaining how the US is manipulating the gold price, keeping it low. And the Chinese were happy with a lower gold price because they wanted to add to their gold holdings, and they communicated to the US that they don't want to buy gold at a very high price. So the Chinese and the US were both in the same team, let's say in the last 10 years, to keep the gold price down. But now that's changing. And that we saw a correction of the gold price in the last 2 years. That was quite a long one, but now we've seen gold has bottomed. And today the Bank of America put out a piece of research saying that gold will go over 2,000 this year and might reach higher levels. So I think gold is into play. Silver was leading this first move up from, let's say, September, October. Gold is taking over now, but we all know silver is gold with some ecstasy, and when gold starts to run, silver will run a bit more, and I think things are starting to get very, very interesting.
Yeah, here's the latest on the gold chart, and it wouldn't take. Here's 2,000 up here. It wouldn't take that much to reach it. I mean, that could happen. That could happen in a 2 or 3 day time frame, very easily. If some,
I don't know if you are technical analysis guys, but I'm a fan of the Elliott wave counts, and I follow A.V. Gilbert, which is a great analyst. And A.V. Gilbert, if you follow his counts, he said we just need one more correction, and then we have the start of wave 3. Wave 3 might have started already, and wave 3, as you might know, is the most powerful wave, and it's a longer wave than wave 1. Wave 1 is what we've seen in 2020 when gold was climbing $300, $400, $500 in short time frame. And if you have the start of wave 3, gold could run towards 2,500 very, very easily in a very short time frame. And look what happens to the gold equities then, because they are so undervalued. And I'm a fund manager of a commodity fund, and we invest in exploration stocks which have gold, silver, but also the battery metals in their projects. And if you look at the valuation of exploration companies, they made a new low in the last 50 years, just last year, if you compare that to the CRB, to the commodity index. So the stocks have such an amazing room to run. And actually we had a great start in the first trading week of this year. We're up almost 5% for the first week, because it's all starting to move in the right direction now.
I've had a few stocks also in the sector that are up dramatically. Some of the stocks have already moved more than 100% off of the lows of, if you were to pick up any of these stocks in September, there's a handful of them. I won't go into names, because then people will be upset that I didn't mention other names. But
I did several interviews at the end of last year, November, December. I said, watch the tax loss selling season. Once that's over, and that's around Christmas, you always have runs at least 20% in the first 2 months of the new year, but you could have a move of 40, 50, 60%. And we're in the middle of that move. Our fund is up from the bottom 15% from the bottom of last year. Last year was a bad year. If you look at the Toronto Stock Exchange Venture Index, where all the smallest junior mines and exploration companies are listed, that one was down 37% last year.
Wow.
We were down 27%, so we outperformed that index. But if you look at the senior names, the gold producers, they're starting to move. They're always the first to react. They're the first to move. And if you want to know if a correction is finished in gold, look at the senior gold equities. Once they start to run, it's always the best sign that the new bull market has started.